This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC TV 18 Motilal Oswal studios. It's a Tuesday morning. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, good morning, guys.
Hi, good morning, Prashant. Good morning, Nigel. And the bulls have been racing through the Lal Street, right, over the last couple of days. I was just having a conversation with a market expert who suggested that perhaps because of what's happening on the political scene as well over the last few days, there is this expectation that maybe the NDA government could come back with a big majority this time, and maybe that's what the market is looking at. Whether it happens or not, of course, time will tell, but this is crazy times in our market where it's just up and away.
Well, that's right. Domestic cues are looking good. I think when we come back on Thursday, we'll be eyeing to see what exactly did the Fed chair say, and hopefully the tone, so to call it, is pretty okay.
You know, Sonia, I take your point because Friday the market was down. The only thing which happened between Friday and when we came back yesterday and we saw that mad rally on banks especially, is that we got through the second phase of polling.
Correct.
And I mean, it's possible that the market got a sense that, I mean, you know, all the talk so far for the first two phases has been about low turnout and how the low turnout is bad for, I mean, the incumbent, which is the BJP. I mean, for example, on Editors Roundtable, we put out that piece saying that it is not necessarily the case. IIFL went seat by seat. And I mean, I think some of that may be turning, and that could have kind of sparked, you know, the sudden move that we've seen. But in any case, I think, you know, just to kind of rewind the clock and tell you what sort of caused it, or rather just looking at whether it was flows, whether it was short covering, I think it's very clearly short covering. At least that's that's what the data suggests. So yesterday's sort of rally, especially what you saw on banks, and you know, because it was banks and banks is largely owned by, not largely, but you know, it's FII favorite, and the way banks rallied, the Bank Nifty was up 2%. There was some at the margin hope that maybe, you know, this is essentially FIIs at the margin coming back a little bit after being very tepid, uninterested, or actually even sellers. But that was not the case. You look at the FII number, there's really not very much to corroborate the big move that we saw. But FII in index contracts, index futures, the number is on your screen. On Friday, they were about 99,000 contracts short, and yesterday that number was cut in half. So, you know, as of yesterday, that number stands at about 46,000 contracts, just under 46,000 contracts short. So this was, I mean, yesterday was largely a short covering move. I think that's pretty clear. Now, just to sort of look at what happened overnight, equities have seen a modest upside. Nothing very large. NASDAQ is up about 0.35%. There was no catalyst, news, data, otherwise out of the US. The 10-year yield that, you know, lost 5 basis points. We're at about 4.61. So, you know, as you want to get away from that 5% mark as much as possible and not revisit that anytime soon. Now, you've got the dollar index, which fell to 105.7. Again, good news. Actually, oil prices also came off, and they were down about 1%. We're at about 88.5. So this morning, I mean, if you want to take off the cues from global markets, it's actually positive. Equities are up, yields dollar down, and you got oil prices which are lower as well. Fed decision tomorrow. I mean, it's a two-day meeting. No changes expected, but I think we'll hear from Fed Chair Powell. And is he going to, you know, start to himself seem a little doubtful? Because he's the one, by the way, who started to sound dovish in the first place. Many of his colleagues on the Fed who are voting members have been kind of being a little more hesitant. But he's kind of said that, well, you know, he sees a path towards that 2% number. So will that change because of strong data that we've had over the course of this year? Something to watch out for. Just to tie all of that back to levels for the Nifty, the immediate resistance, of course, is the all-time high. It's not very far away. 22,775 is that number. On the downside, the swing low, which is 22,385, must not break now. So roughly 22,400 if you want to sort of go with one level. And for the Nifty Bank, I mean, the question you can wonder is, are we starting a fresh expansion higher? Banks have been a favorite, but the complaint has been everybody already owns it, so you need incremental buyers, and that's not been happening. Yesterday, big move, but, you know, I go back and sort of point out the fact that a lot of it perhaps was covering. The low on the Nifty Bank of 48,088 should not break as far as the Bank Nifty is concerned. And then, of course, I mean, upsides, we're already at a new high. So we'll see. I guess 50,000, at least in the first instance this month. The Gift Nifty will come up on your screen, giving you an indication of how the open is. That's about 50 points higher, 22,000. 799 or so as far as GIFT Nifty futures are concerned. Sonia.
Oh, absolutely. Just look at that, right? After the big rally yesterday, the market indications are the GIFT Nifty is suggesting that there'll be an incremental move today. So clearly there's something that this market believes. Perhaps the magnitude of the NDA victory is something that the market is looking at very strongly. That's why you've got this fresh spurt of energy in the last couple of days. Just look at the trends, right? The Nifty is now comfortably above the 22,600 mark. So it's very, very clear that it's a strong uptrend that this market is seeing currently. The Nifty has now gained almost 700 points from the April 18th low. So in less than a fortnight, we've gained 700 points on the index, and all this after the the polls began. And after the phase one polls, of course, despite the low voter turnout, the trend has been on the upside for the NDA government. Now, the US markets and the global markets have been very strong. This morning as well, Nikkei is up 440 points. The investors are, of course, looking to the Fed decision. But if you look at what's happening back home in terms of flows, the domestic participation has been so very strong. So last 6 days running now, we've seen DIIs buy in this market. It's a total of almost 43,000 crores that have been pumped in April so far. So really, this market has good things going for itself. Now, things to watch tomorrow. It's a market holiday, but generally on the first of the month, you get auto sales, and the data is due tomorrow. Looks like this time is going to be another good month for the two-wheeler sales, because the expectation is that there will overall be a 15 to 18% growth for names like Bajaj Auto, TVS Motor, Hero MotoCorp, and many of these stocks have rallied quite a bit already. So keep that on your radar. And today you have results from the likes of REC, IOC, there's Exide, which has done very well. So those numbers are coming out today. There's Adani Total Gas as well. So lots of numbers. But I think the market's, eye is going to be on the Bank Nifty because of the kind of run-up that we've seen, that those 50,000 levels being spoken about as well. And that's really supported the market of the last many days.
Well, that's right. It's a little tricky actually this morning, because if you want to have that good holiday, maybe you take some money off the table. But if you're a positional trader, then what you do is you trail your stop loss and you continue maintaining that long bias. So it appears that
What holiday?
Tomorrow.
It's a global holiday, not just in India, by the way.
That's right. Let's get to the cues then. The Nifty appears it's on its way to around the 23,000 odd mark. The Nifty Bank, it has a date with around that 50,000 odd mark, and we've been making this point as well. Today, the volatility will pick up in the second half of trade ahead of that holiday, because you have the Nifty Financial Services Index and the Nifty Bank. Both of them will play out the weekly expiry. So financials as well as banks will continue to remain in focus. What did the FIs do yesterday? Well, they added long positions and they bought index futures. They added close to around 37,000 long contracts. They covered shorts of close to around 15,000 contracts. So big swing factors what we saw out there. And as we mentioned last week as well, every time you see the FIs net short at around 1 lakh contracts, that's a trigger to go ahead and buy. And it played out yet again. Yesterday, we had a big rally. Last week as well, we did see that the FIs were net short with close to around 1 lakh contracts on the short side. And just take a look at the swing factor. Getting into the weekend, we were at around 53,000 contracts. We came out with a close to 1 lakh contracts on. And yesterday, you saw that half. From around 1 lakh contracts, it's come down to around 45,000 contracts. But there are still shorts in the system, which is heartening. What do the options data suggest? Well, there were two strikes that were fairly active. The 22,850 call, well, that added close to 35 lakh shares odd. And the 22,500 put, that added close to 40 lakh shares. I'll tell you what, in an uptrending market, you want to see the nearest strike, see good amount of open interest build up. And that's precisely what happened. Which brings us to the levels. Now, since we are on our way to around the 23,000 odd mark, I'm giving reference points on the downside. One is the 20 DMA and one is, the 50 DMA out there. So that 22,200 level, till that holds, you'll have to say that this, up move is well and truly on. On the Nifty Bank, well, we are facing some resistance at around that 48,500 odd mark for the last couple of weeks, actually. Yesterday, we took that out and we took that out decisively. So that's the first reference point. Well, the 20 DMA becomes important. Well, yesterday, we saw a bit of an underperformance coming in from the broader markets. But there'll be a couple of stocks that will be in focus. And what's on my radar is Vesuvius. Well, the stock has seen a big rally. It doesn't trade very, very cheap. But good revenue growth is what we saw them, and margins coming at the highest we've seen in the last 10 years. So that's why I expect that stock to be in focus. Premium valuations, but maybe rightly so. So keep an eye out on that one. The second stock I'm looking at is on technicals that we saw yesterday. Bank of India is trading above the 20 as well as the 50 DMA. It's managed to cross that level. It's very, very close to that 52-week high that we're talking about. And yesterday's up move that we saw for around 3.5%, well, it came on solid delivery. So delivery yesterday was close to around 3 times of what we normally see. And banks have been finding favor. So I think keep an eye out on this stock. If it can defend the 20 and 50 DMA, which is around 140, 143 odd rupees, then that stock looks good for more. So maintain your long bias and trail your stop loss. That seems to be the trade today.
Okay, thanks a lot for that. Well, on the equities front, we have a comment coming in from Gautam Dugar of Motilal Oswal Financial Services, who says the next leg of the market rally could be led by election outcome and the magnitude of the NDA victory. He also spoke about Q4 earnings, where he said that banking results were better than expectations. ICICI Bank, SBI and Bank of Baroda are their top picks at the moment. He also added that results from Trent, Ultratech Cement have been very strong, and hence they are bullish on a couple of these names, while they were disappointed with consumer staple earnings, which were quite subdued in this quarter.
Okay, some money market views. Abhishek Goenka of India Forex and Asset Management says better than expected US corporate earnings and no adverse news flow on the geopolitical front have resulted in a revival in risk sentiment despite expectations of a Fed rate cut getting pushed further out. He says tone of the Fed policy on Wednesday and US April jobs report on Friday would be crucial this week, adding that rupee has been relatively stable and he expects it to trade between 82.7 to 83.7 in the medium term.
All right, and on the bonds, Vishal Goenka of IndiaBonds.com says the markets await cues from the US FOMC meeting this week, along with a spate of macro data around manufacturing and employment. Overall, Indian bond yields continue to see much lower volatility versus global bonds, and he expects the bond market to continue to trade in a limited range, with the 10-year benchmark yield in the range of 7.18 to 7.23%.
A lot of stocks to track for you today in our special top 10 segment. Let's run you through the list. We're looking at Poonawalla FinCorp, Linde India, SBFC Finance, UCO Bank, Jana Small Finance Bank, KFin Tech, as well as Vesuvius. 7 out of the 10 will be reacting to positive news flow. On the flip side, Canfin Homes, Birla Soft, and Tata Chemicals will be reacting to negative results.